Greetings and welcome to the Vonage fourth quarter and fiscal year 2020 earnings conference call. At this time, all participants are in a listen-only mode. A question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star 0 on your telephone keypad. As a reminder, this conference is being recorded. It is now my pleasure to introduce Hunter Blankenbaker, Vice President of Investor Relations. Thank you. You may begin.
Thank you, operator, and good morning and welcome to our fourth quarter 2020 earnings conference call. Speaking on our call this morning is Rory Read, Chief Executive Officer, and Steve Lasher, Chief Financial Officer. Also joining us is Jay Bellissimo, Chief Operating Officer, Omar Javed, President of the API Platform, Rodolfo Cardenuto, Head of Unified Communications and Contact Center, and Tim Shaughnessy, our previous interim CFO. Rory will discuss our strategy and fourth quarter results, and Steve will provide a more detailed view on our fourth quarter and full year results and 2021 first quarter and full year guidance. Slides that accompanies today's discussion are available on the IR website. At the conclusion of our prepared remarks, we'll be happy to take your questions. As referenced on slide 2, I would like to remind everyone that statements made during this call may be forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. These forward-looking statements are based on management's expectations, depend on assumptions that may be incorrect or imprecise, and are subject to risks and uncertainties that could cause actual results to differ materially. More information about those risks and uncertainties is highlighted on the second page of the slides and contained in our SEC filings. We caution listeners not to rely unduly on these statements and disclaim any intent or obligation to update. During this call, we will be referring to non-GAAP financial measures. A reconciliation to GAAP is available in the fourth quarter earnings press release or the fourth quarter earnings slides posted on the IR website. Additionally, during prepared remarks today, all comparisons to prior periods are year over year unless otherwise noted as sequential. So with that, I'll turn the call over to Rory.
Thanks, Hunter, and thank you to everyone for joining us today. I hope you and your families are staying safe and healthy. I would like to start by thanking our Vonage team members around the world for their unwavering support and commitment to our customers during these extraordinary times. Our vision is to accelerate the world's ability to connect, and 2020 presented many opportunities to do just that and to make a real difference for our customers. We helped our customers address unprecedented challenges by finding new ways to work, connect, and engage. One example is StoryCorps, the national nonprofit that has brought together more than 600,000 people to record intimate face-to-face conversations about their lives and leave a legacy. It is the world's largest single collection of human voices ever gathered, and it is preserved at the U.S. Library of Congress for generations to come. StoryCorps asked for our help in making these human connections possible when in-person interviews were no longer an option, and we launched StoryCorps Connect. StoryCorps Connect is a free video platform powered by Vonage, created to reduce the impact of isolation and preserve people's stories at this monumentous point in our history. Everyone at Vonage is extremely proud of the solutions we are creating to connect people and businesses across our planet, and this is needed more than ever right now. As we have discussed, Our strategy is to leverage our single global cloud communication platform that powers our customers and partners' next-generation engagement solutions using our APIs, unified communication, and contact center innovations to perform better, connect easier, and to create new business models. To execute on this strategy for the past 6 months, we have focused on optimizing our business for improved operational efficiency. This has allowed us to make strategic investments to drive growth, and we are starting to see the initial results of this work. In parallel, we have established our strategic operating plan for the next 3 years. Today, I'll focus my comments on 3 areas. 1, our solid fourth quarter results. 2, our 2021 product and go-to-market investment activities. And 3, an update on the sale of our consumer business. Steve Latzer, our new CFO, will follow with a more detailed look at the quarter and full year, as well as our 2021 guidance. I'll start with the fourth quarter financial results. Vonage Communication Platform total revenues were $245 million, with service revenues of $230 million, a 17% increase year over year. Within this result, API revenues grew 33% year over year, highlighted by high-value APIs. And our unified communications and contact center application service revenues grew 4%, again, slightly ahead of expectations. Consolidated revenues totaled $323 million, and we delivered adjusted EBITDA of $48 million, both above expectations. As committed, we announced this morning that we are making important new disclosures on our Vonage Communication Platform operating expense and adjusted EBITDA. This is to provide greater transparency to help our investors better understand and value our business, and to enable them to track our progress on the Rule of 40 as calculated by VCP's service revenue growth percentage plus its adjusted EBITDA margin. We exited the fourth quarter of 2020 with a VCP Rule of 40 of 15%. We are committed to steadily improve our Rule of 40 results over the next 3 years. We expect to exit fiscal 2021 in the 20% range, and our plan for 2022 is to be in the mid-20s range and above 30 in 2023. I'll now provide a few fourth quarter highlights by product, starting with API. Revenues grew 33% year over year to $119 million. We saw momentum in nearly every industry as digital communication channels have become a primary differentiator in the way businesses engage customers. API product strength was driven by 3 key areas. First, high-value APIs grew 130% year over year, with voice and video usage accelerating sequentially as customers continued to expand on our platform. Second, dollar-based net expansion increased to 121%, driven by momentum across most industries. We are also seeing additional improvement in travel and hospitality. And third, we remain well-positioned with global scale and a diverse customer set across the world in multiple industries, including healthcare, education, gaming, social, and virtual events, providing a broad-based, balanced growth trajectory. I'll now highlight virtual events. Vonage powers more than a dozen virtual events platforms on multiple continents. We signed several large customers in fourth quarter, winning against both competitors who offer simple video conferencing solutions and other CPaaS companies. SpotMe is a new Vonage customer that provides event solutions to more than 250 global brands, including Daimler, SAP, and Johnson & Johnson. Disrupted by the pandemic, SpotMe needed to build an online platform to keep operating and to meet customer needs. They chose Vonage because of our high-quality video API, ability to enable real-time streaming, and our secure platform with global reach. Now moving to unified communications and contact center products, service revenues grew 4%. Fourth quarter bookings were up sequentially for the second quarter in a row, but remained slightly down year to year. Within this, mid-market and enterprise bookings were up and accounted for more than half of our total bookings. We continue to see traction in cross-sales, not only in unified communication and contact center products, but also in combination with our programmable APIs as we work with our customers to help them drive better business outcomes. One example is Gannett Company Incorporated, the largest U.S. newspaper publisher. Gannett had several disparate on-site PBX systems from multiple acquisitions. They wanted a platform that unified all team members and provided the flexibility to work from anywhere while delivering voice, video, messaging, and social media from a single user interface. They chose Vonage for our integrated unified communications and contact center solutions that seamlessly integrate with their productivity and CRM applications, as well as our ability to scale with them using our communication APIs. Another example is Great Wolf Resorts, a brand leader in the indoor family water park resorts category. Great Wolf chose Vonage because it needed a partner that could provide a contact center solution with deep Salesforce integration and help them create a differentiated user experience. Great Wolf is using our Vonage contact center solution along with our AI capabilities and programmable voice and messaging APIs to offer new, customized, and interactive engagement experiences for all of their guests. We expect our improving booking trajectory to continue throughout 2021 and translate into increasing unified communication and contact center growth rates in the second half of the year. 2021 will be a year of execution and targeted growth as we further invest in our product development and a tailored go-to-market so we can provide our customers with the communication solutions that best fit their needs and win a disproportionate share of the market. I'm confident we are putting the right sales structure and strategy in place. Our new e-commerce platform and self-service capabilities for micro and small business markets are new, cost-effective ways to scale growth. We'll augment this with a more strategic focus on enterprise and BCP cross-selling, leveraging our strong direct sales force. The channel is a key part of our growth strategy, and we started building a stronger channel foundation in 2020. We will make further investments in 2021 to differentiate our channel program with additional support in key markets, new incentives, product innovation, and new infrastructure that will make it even easier to partner and win with Vonage. Finally, as we committed, we have completed a comprehensive 9-month strategic review of the consumer business through the assistance of financial, accounting, and legal advisors. Based on this review, which included a detailed analysis of the consumer business financials, profitability, and potential valuation, the Vonage board has determined that it is in the best interest of our company's shareholders to terminate the sales process and retain the consumer business. We have reached out to approximately 70 strategic and financial sponsors to gauge their interest in a potential acquisition of the consumer business. A number of the potential acquirers expressed interest in the business, but none at the value that the board believed was acceptable to move forward with a sales transaction. Our decision was driven by valuation and $600 million of cash generation we expect from consumer over the next 5 years. We can run this business easily, efficiently, and without distraction. Moreover, this decision ensures a strong balance sheet and financial flexibility to invest in BCP capabilities and potential M&A. Importantly, the detailed financial reporting now available will enable investors to evaluate BCP in a manner comparable to a standalone business. In closing, Vonage is in the right place at the right time in a large and growing market. We have improved the business over the last 6 months by creating operational efficiencies that allow us to invest in growth opportunities and to consistently execute on our commitment. We will focus our execution on efficiently delivering a compelling solution portfolio in attractive markets to create differentiated value to our customers. We are making solid early progress, but we have much more work to do to build an even better Vonage. We are committed to delivering improved growth and profitability across 2021 and will drive further efficiencies and growth opportunities as we scale our business in 2022 and 2023. We look forward to sharing more details during our Analyst Day on March 5th. I am pleased to enter this important year with a strong leadership team, enhanced by our critical senior leadership hire since our last earnings call. With this leadership team now in place, we are set to execute. Dave Bellissimo joined us as Chief Operating Officer, leading sales, operations, and our go-to-market strategy across the Vonage Communications platform. He has deep knowledge and operational expertise in software as a service, cloud solutions, and artificial intelligence, with a proven track record of helping organizations accelerate digital and business transformation efforts by moving to the cloud. Steve Lasher, who we introduced earlier in the call, has joined as our new Chief Financial Officer. Steve's deep knowledge of technology and the software space and a long history of leadership in finance, business transformation, and business development will make a significant impact on helping Vonage drive revenue growth and increase profitability, while we invest to strengthen our innovation capability to create differentiated value for our customers. And we announced yesterday that Savinay Berry will join as Executive Vice President of Product and Engineering, responsible for the global leadership of Vonage's engineering, product management, IT, and security team, focused on driving the company's technology strategy and innovation of the Vonage communication platform and its portfolio solutions. Savinay has extensive experience in technology, software, and the cloud, with a track record of developing highly innovative products and spearheading results-driven transformational change. Each of these executives have deep cloud and SaaS experience with a long history of demonstrating results in building growth businesses at scale. Before turning the call over to Steve, I'd like to thank Tim Shaughnessy for his strong work as our interim CFO, which has helped us to become more efficient and develop better operational execution. He has also played a key role in the consumer review and driving greater transparency in our financial reporting. Thank you, Tim. And with that, I'll turn the call over to Steve.
Good morning, everyone, and thank you, Rory, for the warm introduction. I'm honored and excited to be the CFO of Vonage. I believe there is a huge opportunity in front of us, and I am looking forward to working with Rory and the leadership team to capture more market share while driving operational excellence and profitability. Turning to our results, I'll cover the following topics. First, I'll begin with a brief discussion of our consolidated Q4 and full year 2020 performance. Second, as Rory mentioned, this quarter we began providing additional disclosures on our Vonage communications platform and consumer segment. So I'll review these results in more detail. And third, I'll cover our first quarter and full year 2021 guidance. And with that, let me dive right in, beginning on slide 7. Consolidated revenues of $323 million increased 4%, driven by a 12% increase in VCP revenues, offset by declines in consumer. For the full year, consolidated revenues were $1.2 billion, a 5% increase. Fourth quarter consolidated gross margin was 54%, down slightly due to the faster growth of relatively lower margin VCP revenues, which now represent 76% of consolidated revenue, up from 70% in the prior year. Consolidated operating expenses were $169 million, down 1% year over year, improving our expense to revenue ratio by 3 points, as we continue to optimize the business for faster growth and improved profitability. I'll discuss OpEx in more detail in our segment results. Consolidated fourth quarter adjusted EBITDA of $48 million was up $3 million year over year due to improving revenue performance and cost structure action. For the full year, adjusted EBITDA was $170 million, an 8% increase. Before turning to segment results, I would like to highlight that we've included an 8-quarter historical view of the VCP and consumer segment on slides 16 and 17 in the earnings presentation. Now, let's review fourth quarter VCP segment results beginning on slide 8. VCP service revenues increased 17% to $230 million. Service revenues exclude product, access circuits, and USF fees, which totaled $15 million in Q4, down $7 million. Full year 2020 VCP service revenues were $856 million, a 19% increase. Within VCP, API revenues, all of which are service, were $119 million in the fourth quarter, up 33%. High-value APIs grew 130% year over year, with particular strength in video, voice, and IP messaging. High-value APIs represented roughly 20% of the total API revenue. Unified communications and contract center service revenues were $111 million in the fourth quarter, up 4%. VCP revenue churn was 1.3% in the fourth quarter. Churn within UC and CC was at record lows. However, this was offset by higher churn on our APA platform, driven by a loss of certain customer traffic in Asia due to government regulation. Monthly service revenue per customer increased 16% to $552 due to increases in average customer size across the VCP platform. Moving to slide 9. VCP gross margin in the fourth quarter was 46%, down 100 basis points year over year, driven by mixed dynamics within the quarter. For the full year, VCP gross margins were 48%, up 100 basis points. VCP sales and marketing expense for the fourth quarter was $77 million, down $7 million versus the prior year and down $6 million sequentially, due to our business optimization effort to improve the efficiency of our sales and marketing. This was offset by selective investments into our API sales team. VCP engineering and development expenses were $20 million, up 22%, reflecting increased investment on the VCP platform, including video and voice functionality and scalability. E&D expenses plus capitalized software totaled $32 million, which represents 14% of VCP service revenue. VCP general and administrative expenses for the fourth quarter was $38 million, up $2 million due to higher restructuring charges primarily related to lease abandonment and consulting fees on the consumer strategic review. VCP adjusted EBITDA was negative $4 million, improving from negative $18 million in the prior year and negative $14 million in the third quarter. VCP adjusted EBITDA benefited from our efforts to drive greater operational efficiencies while growing revenue. Moving to slide 10, consumer segment revenues were $79 million in the fourth quarter and totaled $333 million for the full year, a 14% decrease. We ended the quarter with approximately 900,000 consumer subscriber lines. 2-year plus tenured customers now represent 94% of our consumer base, and 5-year plus customers are 79%, which have churn rates of 1.6 and 1.5% respectively. Consumers' average monthly revenue per line was $28.13, up 56 cents, reflecting higher USF fees and targeted price increases that we implemented during the year. Churn of 1.7% was stable compared to the prior year quarter and down 10 basis points sequentially. Consumer adjusted EBITDA was $52 million in the fourth quarter and $227 million for the full year. This business provides profitability and cash generation, which help fuel our growth initiative. On slide 11, we ended the fourth quarter with $517 million of net debt, down $20 million sequentially. As of December 31st, net debt was 3 times last 12 months adjusted EBITDA. Given the strong cash flows of the consumer business and improving cash flows of VCP, we expect to continue to pay down debt in 2021, ending the year below 2.5 times. Moving on to guidance on slide 12. For the first quarter, we expect Vonage Communication Platform revenues in the range of $240 to $244 million. We expect Vonage Communication Platform service revenue growth of approximately 16 to 18%. Embedded in this guidance are the following trends. In API, we expect first quarter year-over-year growth in the 34 to 36 range, reflecting continued positive trends in high value and messaging. With regard to Unified Communications and Contact Center, we expect service revenue growth in the low single digits. We believe first quarter service revenue represents the trough of the UCCC growth rate decline, and that we will see a modest improvement in growth rate in each quarter of 2021 thereafter. We expect first quarter VCP adjusted EBITDA to be in the range of negative $7 million to negative $3 million. Within consumer, we expect revenues in the $75 million range and adjusted EBITDA of approximately $49 million. On a consolidated basis, we expect total revenues of $314 to $318 million and adjusted EBITDA in the $42 to $46 million range, with a sequential decline due to the reset of annual employee benefits and a step-up in sales and marketing activity. For the full year, we expect Vonage Communication Platform total revenues in the range of $1,038 million to $1,054 million. Within this, we expect service revenue growth of 15 to 17%, driven by API growth approaching 30%, and UC and CC service revenue growth in the low to mid-single digits. We expect VCP adjusted EBITDA to be positive for the full year of 2021 in the $5 million to $9 million range, a substantial increase from negative $57 million in 2020, reflecting our focus on continued operational efficiency. For consumer, we expect 2021 revenues in the $285 million range and adjusted EBITDA in the $185 million to $189 million range. Total consolidated revenues are expected to be in the range of $1,323 million to $1,339 million. We expect full year 2021 adjusted EBITDA in the $190 million to the $200 million range. With that, I'll turn it over to the operator to initiate the Q&A.
Thank you. We will now be conducting a question and answer session. If you would like to ask a question, please press star one on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star two if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star key. One moment, please, while we poll for your question. Our first question has come from the line of Ryan McWilliams with Stephens. Please proceed with your question.
Thanks for taking the question. So just to dig in to start on the consumer decision, how were the interest levels during this sales process, and what was the valuation that you were trying to achieve here? And just given how extensive this review was, does this really close the book on Vonage potentially selling its consumer business?
Hey, Ryan, thank you for the question. There's no question we went through a comprehensive strategic review. First, we had to understand, and we brought in accounting and professional consultants to really dissect the business and pull it apart, because it's always been our intention to give greater transparency to our investors so that they could understand VCP, the Vonage communication platform, and the consumer business. It was definitely robust, approaching 70 strategic and financial sponsors. There's no question we went through 2 rounds of discussion, and we had quite a number of interests. But at the end of the day, Ryan, it really comes down to this is a very efficient access of capital for us. We can run it efficiently without distraction, and this gives us real flexibility as we continue the strategic pivot of Vonage from its traditional heritage to this leader in the global communication platform space. There's no question we'll continue to invest in BCP to drive faster growth, as I mentioned in the progression of the Rule of 40 over the next 3 years, and that's something we'll dig into at the Analyst Day on March 5th. But I believe that this is clearly the right decision, and clearly we've closed the book on this one. End of discussion.
Thanks. And the guidance for positive adjusted EBITDA for VCP was a nice surprise. I especially like hearing about some of the wins in the video API segment. But since you are keeping consumer and its cash flows, why is it important to you to have this positive adjusted EBITDA next year for VCP? And why not drive even more investment through the API business in fiscal 21 to accelerate growth?
Yeah, it's just modestly positive, Ryan. There's no question about it, and we want to keep it in that range. The optimal model in terms of VCP is always going to be focused on growth at the top in terms of the service revenue. We want to make that strategic pivot, but we also, over the course of the next 2-3 year journey, is to make sure that business is very sustainable on an ongoing basis and can fund the investment and growth that we really want to drive in that space. We're not going to go heavy on the bottom line in terms of driving it. You're going to see we've tried to keep our firepower in terms of marketing and sales investment quarter after quarter this year to continue to improve that growth trajectory, right? And the work from Jay Bellissimo and his team as they come on with Rodolfo and Omar, Joy Corso on the sales, on the marketing side, you're going to see us invest in velocity marketing to drive UC and CC and cross-sell, and you're going to see continued focus to extend that API momentum as we go forward. I think that's a really important part of the ongoing strategic direction of the company. This is not a bottom line, as you mentioned, focus. We want to keep it in that general range, but then continue to focus on capturing more growth, accelerating the business over the next 2-3 years as we improved our efficiency. And at the same time, Ryan, invest in product innovation this year and next so that in 22 and 23, those years become the year of the product. And those product enhancements give our next leg up in terms of additional product growth. That's where we're going, and that's the strategy we're on.
Thanks. Look forward to hearing more at the Investor Day. Good luck, guys.
Yeah, me too. Thanks, Ryan.
Thank you. Our next question has come from the line of Tim Horan with Oppenheimer. Please proceed with your question.
Thanks, guys. Can we delve into the API a little bit more? We're seeing kind of viral growth from a bunch of more developer platform-focused business models out there. Is this still an important part of the strategy? And maybe you used to give kind of developer numbers that were working on the platform. Can you give us an update there? Thank you.
Hey, Tim, how are you? Good to speak with you. Hey, Tim, from the standpoint of API, no question about it. It's a key component to the strategy. The Vonage communication platform is built on that API platform and really leverages those APIs to build once and sell many across the purpose-built capability. We see that same kind of momentum, and you saw Steve's comments about continued strong growth as he kind of looked at 1Q. We don't know exactly how the moderation of the pandemic will occur, and we all hope that it moderates as soon as possible. But there's no question that the market and the way people work has changed forever, and it will continue to be more and more virtually based and more communications driven. So we think we're at the beginning of a 5 to 7 year trend in this kind of programming technique and this kind of approach around API. You're going to see us continue to invest in that platform using the dollars and capabilities of the business to enable us to continue to grow that. And you're going to see that. I think we'll take a piece on the developer background at the Analyst Day so we could kind of go deeper there. Jay, Omar, anything you want to add in terms of API going forward?
Rory, it's Jay. I would just add also that we've got great diversity when you look at our balance across the geographies. APAC, 39% of our revenue, Americas 38%, and EMEA 23%. And we see a lot of great opportunity to really go across the geos and go deep in those geos. And that's providing some really good year-over-year momentum as well as quarter-to-quarter momentum. So we see a very positive outlook in terms of building that. And then the other point I'd highlight is just the customer expansion. We're seeing more and more customers engage and use the wider portfolio of our APIs. With that, over to you, Omar.
Thank you, Jay. And great question. I'm glad that you recognize the power of the developer community. So I'll just share some insights there for you. We have the second largest developer ecosystem in the space. We have over 1 million registered developers. And just to give you some recent facts here, we've got, I think recently, about 3.1 million documentation views, 10.3 million SDK installs, representing about 13.5 billion API requests. And as Rory mentioned, we are going to be highlighting a lot of this and go through this in a lot more detail in the Investor Day. But this is an area that we have been investing in for quite some time, and we see a lot of great momentum from it.
Exactly what I was looking for. Thank you. I look forward to the Analyst Day.
Thanks, Tim.
Thank you. Our next question has come from the line of Rich Valera with Needham & Company. Please proceed with your question.
Thank you. Good morning. At the risk of, front-running the Analyst Day, I'm going to ask a couple of questions on the apps business. First, I know you've had some initiatives to kind of shore up the base of that business, particularly the VBE cohort and the micro SMB component. So I wanted to kind of get your status updates on those initiatives. Have you seen some stabilization or improvement in that part of the base? And then just high level in terms of how you're thinking about go-to-market for MME there. I know historically you'd really been aligned with Salesforce and going after accounts that were sort of standardized on Salesforce and leveraging that integration. Can you give us any high-level thoughts about how you're thinking about going to market in MME going forward? Thank you.
Thanks, Rich. Hey, Rich, there's no question that the focus to tailor that go-to-market by customer segment where the products best fit and where we apply the right go-to-market is the right strategy. You're going to see us continue to build out this self-service and e-commerce at the bottom of that and the micro and beginning with small. Then you're going to see a lot of work around the channel, particularly in the second and third quarter as we introduce new capabilities, new incentives, new programs, making it easier and better to win with Vonage. And then that powerful sales force, that's what's going to drive that direct sales force at the top of the stack at mid and enterprise. It's tailoring to each area to get the efficiency. And then the work that Joy Corso is doing from our CMO perspective to drive the velocity marketing, particularly across micro, small, and mid. We're seeing some really interesting traction on some investments that we've done here in the first quarter. And as we get that information, we'll accelerate that through the balance of the year. So why don't I pass that over to Jay and Rodolfo just to add a little bit more color.
Rodolfo, did you want to start?
Yeah, thank you for the question. I think you commented about the DBE and the micro business. It's important to notice that we are bending the curve, as you see in the revenue progression since Q2 last year. We have been progressing from Q2 to Q3 and Q4, and we expect that to continue during this year. This is because we are bending the curve in our DBE and micro business. One important thing to notice in terms of micro business investment that we did in the e-commerce. Now we have an easy acquisition for our customers using e-commerce, self-provisioning, so easy provisioning for our customer, and self-support also. Those were the process and that we implemented to make a micro business very profitable and growth for us. And in terms of Salesforce, we are doubling down with Salesforce. We have the best experience with Salesforce now, but we are also implementing and actually evolving with ServiceNow and Microsoft. With Microsoft, we have the two connections now, Microsoft Teams and Microsoft Dynamics. We have a very good integration with Microsoft Teams and UC solutions, and we have a very good solution also for Microsoft Dynamics with CCaaS solutions. Not to mention the ServiceNow that we are getting a lot of attractions with them. So we are moving from doubling down with the Salesforce contact center, but also moving with the ServiceNow and solutions with Microsoft.
Hey, Rich.
I'm sorry, I was just going to add a couple quick points to Rodolfo. A couple other things for the portfolio in the UC and CC space is we've seen some really good sequential growth in the bookings, and we're planning to exit the year in the high single digits in service revenue. And with that, we expect next year's service revenue to be in double digits based on the trends we're seeing today. Obviously, there are some unknowns with the impacts of the pandemic, but we're feeling good about this business and the growth. And to Rodolfo's point, yes, Salesforce has been a key part, but as he alluded to, we're also looking at the partnerships with ServiceNow and Microsoft. Over to you, Rory.
Yeah, and Jay, I think that's an important point. What you want to do, look, Rich, is let's see, and we talked in Steve's comment that looks for the trough in 1Q, and then we should see year-to-year bookings growth starting in 2Q. We should see a steady improvement into the mid high single digits in the 2021 timeframe. And as we look into next year, I think we can get into that, low mid double digit growth rate in 22 as we continue to progress through this transition. Thanks, Rich. Next question.
Thank you. Our next questions come from the line of Meta Marshall with Morgan Stanley. Please proceed with your question.
Great, thanks. Just a little bit more on the UCC business. Is there any different trend that you're seeing between maybe the contact center piece of the business and the UC piece of the business? I know they're fairly well integrated at this point, but just any commentary there. And then the second piece would be just on kind of the gross margin. Clearly you're doing well with the higher margin API business, or you're seeing a lot of growth kind of in that higher value API business, but the gross margins of the segment just continue to kind of fall off. So just what are we seeing in terms of the competitiveness or the margins of the rest of the API business? Thanks.
Thanks, Meta. This is Rory. So first comment would be on the UCCC. We're seeing some very good cross-sell activity across that portfolio. And again, where we see the CC strength is definitely in mid and enterprise, where we can definitely leverage the strength of our direct sales force to go to market. UC, we have it not only there in that cross-sell, but then across the bottom of mid, small, and into micro, where we're going to use those more efficient techniques with the channel and with e-commerce to drive that growth. I think CC continues to have strength, particularly as it's related around Salesforce, and then the expansion of the TAM with ServiceNow and Microsoft, that opens up more opportunity. But that's really going to be a direct Vonage sales play and leverage that continued growth. And when we gave those kind of feel for the next several quarters, that movement of the business is really a UCCC combination, going from the trough here in low single digits into the mid and high single digits across the 2021 time period, and then further in 22. But I'll let Steve Lasser give an update on gross margin and give you a feel for where we're sitting on that. Steve?
Great. Thank you, Rory, and thank you, Meta, for the question. As we look at our VCP gross margins, when we take a look at first at where we are, we had strong growth in API, 33% growth from a revenue perspective, and then also from a UCC perspective, 4% growth. And if you look at the margins across the product, they were relatively stable, and it purely is a mix within our product offerings within there. So again, with the mix within the API-oriented businesses, our goal is obviously to improve margin, but we're really looking to drive the API scale as we go forward. And I really think that's it. As we continue to expand the business, get it, and use the power of the global reach and the portfolio, we will also at the same time look to improve the margins as we go forward.
Great.
Thanks, Meta.
Thanks,
Next question.
Thank you. Our next question has come from the line of James Green with William Blair. Please proceed with your question.
Thanks for taking the question. Just a couple. One on the balance sheet side, I think you said that you were looking to get below sort of 2.5 times leverage. Sort of implies paying off around $30 million or so of debt this year. Is that sort of the goal of operating cash flow generation on the consumer side is around 120 based on your estimates and sort of running VCP at break even?
Steve?
Yeah, sure. Thank you very much, William, for the question. We are, as we look to continue to operationalize the business, we are looking to pay down debt. Obviously, we want to make sure we are optimizing the business, and if there are other opportunities for acquisition or the like, we will make sure we prioritize those. But as you've seen, we've made some real strong improvement in our profitability, and as we've given the guidance as we move forward towards the end of 2021, we want to be second half profitable and full year profitable. So again, within that, we're going to evaluate what do we do and continue to pay down the debt is one of our priorities.
And again, on that one, really the focus again is if there's opportunities for us to do strategic M&A, we're going to look at that hard, and then also the work to invest for faster growth across VCP. This gives us more firepower and more flexibility.
Thanks. And then just on the sales side, relative relationship with channel partners and agents, et cetera, how you just give some color around how that's progressed, maybe quarter, year-over-year in terms of being invited into more deals and maybe the win rate?
Yeah. So from the standpoint of the channel, I spent a lot of time over the past 6 months meeting with various channel partners across the ecosystem to really understand how to be a better partner with those channel partners and what would create that momentum. Both Rodolfo and Jay have a long track record of leveraging the exponential power of the channel to drive growth, to drive expansion while we're sleeping across the planet, right? That's the power of the channel. We've targeted and looked at our products, our portfolios, our documentation over the last 4 or 5 months. We're making changes to all of that, additional capabilities, and then we're working right now in concert with feedback from our channel partners on the right next set of incentives and to really drive that growth. You'll see that launch for 2Q, and then we'll see us continue to build that out this year. It suffices to say that this is going to continue to be an even more important driver of our growth as you see us move up that curve from a VCP Rule of 40 exit of 2020 at 15, at 2021 at the 20 range, and then in 2022 in the mid-20s. That is a key piece of it. So you're spot on that, and we'll look forward to giving you updates as we go forward. Thank you. Next question.
Thank you. Our next question has come from the line of Mike Lattimore with Northland Capital Markets. Please proceed with your question.
Great. Yeah, thanks. It's just 2 questions here. You just threw out the notion of strategic M&A. I guess, can you give a little more detail on what you're thinking as a potential kind of criteria there? It seems like your product portfolio is pretty well rounded out now. So just kind of curious what you might think about in terms of strategic M&A. And then second, in terms of new bookings opportunities for your API business, how important is this notion of cross-selling into the application base there? It seems like a lot of the growth is just coming from direct at this point.
Sure. So let's talk about M&A. M&A is opportunistic. We always are looking to potentially augment our technical innovations, and there's lots of opportunities out there, but it has to make sense. If it expands our reach, our revenue base, and our capabilities in terms of routes, that's also attractive. At this point, we've done a really good job over the past 3-4 years in strategically pivoting the business Vonage communication platform. I think we've got the base products, as you point out, Mike. I think if there's any of that activity, it's opening up market expansion in TAM, or it's augmenting technical innovation. It's going to be opportunistic, and we're going to look at that going forward. Then from the API standpoint, I'll swing it over to Omar.
Hi, Mark. Thank you for the question. I think what you were asking for, how big is the opportunity in cross-selling APIs to apps and vice versa versus focusing on APIs. I think as we've laid out even before, the opportunity within API is very strong. We continue to focus on it. Rory, Jay, and team, I candidly wouldn't have it any other way. However, we see we've invested a great deal, and we have a strong customer base on the app side, and it would behoove us to figure out how to become stronger at selling those solutions within those customers. So I think that's an opportunity, but we are very, very focused on being great at the API business as well.
Okay, thanks.
Great. Next question.
Thank you. Our next question has come from the line of Catherine Trebenick with Dougherty. Please proceed with your question.
Thanks for taking my. Yeah, no, sorry. I had you on mute. It was not a quick mute move on my part. Thank you for taking my question. I have 2. One is, seems you have added a lot of senior management team recently. Are you moving to a more traditional management structure with CTO, engineering, sales and marketing, and away from more what was happening a year ago where you had 2 centers of power, I would say, with API and then the CC group? I'm just trying to understand the new organization structure and how that pans out for responsibilities and roles.
Sure, Catherine. Hey, there's no question. I love the power of the Vonage communication platform, an API-based platform with global reach, leveraging this global carrier network, a cloud-based infrastructure around the world. We can reach any customer, any partner, anywhere. And our APIs give us this buildable base and these purpose-built applications built on top of it in UC and CC. That's the power of Vonage. It's diverse in terms of the geography representation of revenue, the industry representation. Let's leverage that. That's the power and one of the differentiators of Vonage. And when you have the opportunity and you get into this, and we're going to drive a culture around accountability, collaboration, trust, and driving excellence, we're going to do what we say and own what we do, and that's going to be our culture. Want to make sure that we augment an already strong senior leadership team with really amazing talent. I mean, first, Joy joins us in terms of the CMO. Then we go get Jay, Steve Lasher. Look at the scale there. And then Savinay Berry just yesterday. These are opportunities in combination with the skills that we already have on board that are now building a company, not for today, but for the next 3 years and the next 5 years. That's the kind of idea that we're tackling here. And we want to leverage that Vonage communication. That's what customers are looking for. Communications are going to rule the day over the next 5 to 7 years. We're in the right place at the right time with the right team. And then under that, the technical team that we have in engineering and product, I'll go into any battle with that team anywhere. Thanks, Catherine.
Yeah, and then the follow-up is, could you parse for us what the high-value API gross margins are? I know at one point in time I was thinking the video API was around 60%. Any possibility you can parse some of that information out for us? Thanks.
Yeah, at the product level, we're not going to kind of get into that kind of level. Suffice to say, high value is definitely on the higher end of the portfolio in terms of the mix. There's no question, and we're growing a higher and higher percentage of that as we go forward. But there's no question it's the power of VCP. And with the new disclosures now, you can see that business much more clearly over the past several years, how that's progressing and growing. And then with the work that we're going to do at Analyst Day, we're going to set the vision for where we're going to go over the next 3 years. Thanks. Next question.
Thank you. Our next question has come from the line of George Sutton with Craig-Hallum. Please proceed with your question.
Thank you. Rory, you gave about a 1,500 basis point suggestion of improvement in your Rule of 40 over the next 3 years. I wondered if you could just break that down into growth versus margin plans.
George, how you got to look at that, as we kind of talked about at the beginning with Ryan, growth has to be the optimal driver. You know, in an optimal kind of model, if we were looking 3 years out, 3 years out is a ways away. But as you go for that 30 or better number in that time frame, you're going to want to look for something in that mid-20s range on growth. Obviously, higher is better, but that part. And then you want to be in that mid-single digit on the bottom. There's no question that the opportunity is on the growth side. We're in the high teens today on VCP revenue growth. We need to accelerate that over the next several years. Bottom line, there's lots of ways to make those numbers, but we definitely want to orient ourselves towards that growth driver. Does that help, George?
That's very helpful. Thank you.
Okay, next question.
Thank you. Our next question comes from the line of Will Power with Baird & Company. Please proceed with your question.
Okay, great. Thanks. Yeah, I guess a couple I'll try to sneak in here. I guess, Rory, now that you've concluded the, consumer strategic review, I wonder if you could just remind us of, the strategic importance of having API and, the UC contact center businesses together. How intertwined are those? And, could it make any sense to look at strategic alternatives for the UC contact center business just to help shine a brighter light on the API segment?
From my standpoint, Will, there's no question we're better together. The power of Vonage is in that reach and scope. I have no hesitation at that at all. The Vonage communication platform will be based on API-based platform, and we're going to use that global carrier network, that global infrastructure reach to be able to reach any customer anywhere around the planet. And then what we're going to do is use those APIs and build those once, and then build those into the UC and CC capabilities as we move forward. Sure, there's no question that there's some different sellers, but we already are seeing examples, and I referenced a couple in the prepared remarks, where customers are definitely seeing the power of UC and CC and that combination, and we're seeing a lot more in terms of our sales force flow in terms of combined cross-sell opportunities. But then they love the API work to build out and give them scale and reach as they build out this communications reach. Does that help?
Yeah, no, that helps. Thank you. I guess this maybe just the second quick follow-up. As we look at the API segment and guidance, I think you all are expecting an acceleration in revenue growth from what was just reported. So I'd love any further color as to, kind of the key drivers, behind the API outlook.
There's no question from an API standpoint, we've seen some impact from the pandemic around hospitality and travel. But we've also seen acceleration in video and voice and verification and some of the others. It's a little bit hard to predict how the moderation of the pandemic will occur across 2021. We all want it to moderate. It's the best. There's no question that this change in the way business is done is going to continue. But I think that kind of momentum is just going to continue to go. And what we've done is prudently looked at the full year, balancing what we're seeing in the short term with the unknown of the moderation of the pandemic. At the end of the day, we want to make sure we're delivering information that we're going to execute on and execute with excellence. Thanks, Will. Next question.
Thank you. Our next questions come from the line of Michael Rollins with Citi. Please proceed with your questions.
Thanks, and good morning. Two, if I could. First, I was curious if you could provide an update on how you see the addressable markets in terms of revenue for the key product categories, if you were to look out over the next 3 to 5 years, and just take into account the evolving ways in which enterprise firms and their customers are engaging with each other. And then the second question goes back to just the management of the business. And curious if you're going to run, now that you're done with the strategic review, you illuminated more financial disclosures for consumer, are you going to run consumer as essentially a company, a smaller company within the Vonage portfolio, and it'll have its own balance sheet and its own specific objectives that are separate from the way you run and manage VCP? Thank you.
Yeah, so Michael, I'll take the second one first, and then you can remind me of the first one, guys, on the screen. The second one, in terms of the consumer business, in terms of that, we definitely run that almost as a separate business today. There is some synergies across that, but they're relatively minor. This runs well. It's efficient. We have a strong, small team that's working that, and I believe that we can run that business well and without distraction. So you should think about that as a separate business segment set off to the side, running where it makes sense. We'll use some synergies, but for the most part, that's pretty standalone. And then the market opportunity around API, that in terms of the Vonage communication platform, there's no question from my standpoint. It's the reason I came to Vonage. I believe that this is a secular change in the way communications and programming is done across multiple modes of communication to embed in every workflow, every application, every business process. It's going to change, and the pandemic, as unfortunate as it's been, has only accelerated that. And we're going to see that continue to happen for the next 3 to 5 years. We are in the right place at the right time. Thanks, Michael. Next question.
Thank you. Our next questions come from the line of Samad Samana with Jefferies. Please proceed with your questions.
Hi, good morning. Thanks for taking my question. I'll just squeeze one in since we're already over the 9:30 mark. But if I think about the changes in the senior management team, as you mentioned, you've deepened the bench, you've made a lot of changes over the last 18 months. How should we think about maybe the turnover rate in the quota-carrying sales rep organization, and maybe what was churn or retention there in 2020, and how should we think about in terms of backfilling or supplementing that in 2021? And then just, I know you have an analyst day coming up in a few weeks and don't want to steal the thunder from that, but maybe how should we think about any additional strategic changes as it relates to the management of the business?
Yeah, I feel good about the org structure and how we built the leadership team. Can there always be small modifications? We've done the major work over the past 6 months. I think with the 4 additions, I think we're in the right place. In terms of the first question, and Samad, you talked about our sales team. My experience in every business I've ever been part of, the number one driver of sales productivity, and the reason you're asking it, is spot on. It's time and patch. We've seen strong continued flow through. So the longer someone is selling our products and our capabilities, the more productivity they have. We want to create that environment where they want to be part of that and continue to grow with the business. We've seen, at or below industry levels of attrition over the past 2 years, and over the past 12 months, it's actually declined. But it's something that I know Jay believes in big time in terms of driving that productivity comes from time and patch, and we're going to definitely manage that. So the data on that one, you should think that we're having the team at industry or lower attrition rates, and that we're keeping those players focused to grow that business. Thanks. Next question.
Thank you. Our next questions come from the line of Sterling Auty with JP Morgan. Please proceed with your questions.
Hi, this is Drew on for Sterling. You've mentioned this e-commerce self-service platform that will drive growth with micro businesses and SMBs. Is that a completely new solution? And if so, could you provide some more color on the strategy surrounding that?
Sure, Drew. Great question. And I really want to emphasize there's 2 pieces to it. It's not only the capabilities that we introduced over the past several quarters. It's something of the strategy that Rodolfo has been on and building out, and that micro and the beginning of small segments. The other part of it is the work that Joy Corso and the marketing team are doing to drive velocity marketing around that. And as I mentioned, in first quarter, we've implemented a number of new velocity marketing tactics, and we're seeing some very good signs. We're going to double down on that to drive that growth. But that's been a strategy since Rodolfo got here at the end of 2019, and he's been driving that change. We'll cover that a little bit more detail at the Analyst Day. Thanks, Drew.
Thank you. There are no further questions at this time. I would like to turn the call back over to Rory Read for any closing comments.
Hey, I want to say thank you to everyone for participating. As committed, we communicated greater and more transparent disclosures. We closed on the strategic review of consumer, and we delivered a solid quarter in fourth quarter. We have a strong leadership team and a committed Vonage set of team members that want to create a better Vonage going forward. We're excited to tackle 2021 and beyond, and we look forward to sharing more information with you at our Analyst Day on March 5th. I want to thank everyone for joining and the entire team that answered questions today. We appreciate it. Everyone have a great day. Stay safe and stay strong. Thank you, everyone.
Thank you for your participation. This does conclude today's teleconference. You may disconnect your lines at this time. Have a great day.